Welcome to the September meeting of the Audit, Budget, and Finance Committee of the Buffalo Fiscal Stability Authority. Thank you all for being here. Our agenda today includes first, a review of the audited financial statements as presented by the independent auditors from Ludsman and McCormick. Second, a review of the 2021 annual report as prepared by staff. And third, a review of the annual investment report. And finally, fourth, a one-year contract extension with PFM, who are BFSA's financial advisors. I'll take a roll call. Chair Olson is excused. Director Floss is here. Vice Chair Jerzak?
Present.
Here. We have a quorum, so we can continue. The first item of business is to approve the minutes of the meeting held on June 21st, 2021. The draft minutes and the accompanying draft resolution are located under tab 2 in your board book. Is there a motion to approve the minutes? Jeanette?
So approved.
Okay,
So motioned.
All those in favor say aye.
Aye.
Great. The next order of business is the receipt of the results of the independent audit of the BFSA for the fiscal year ending June 30th, 2021, and to recommend the acceptance and approval of the financial statements to the full board. The draft financial statement and related reports have been provided to you under tab 2. Sarah Drayton, audit partner for Ludsman and McCormick, is here to present the audit findings. Ms. Drayton, welcome and thank you for coming to the meeting today. Would you please present your findings?
Sure. Good afternoon, everyone. I am going to share my screen so you can see the presentation. I think that worked on the first try. Can everyone see that? Great. Okay. So yes, as Fred said, we are here to present the results of your audit. Your fiscal year is June 30th and 2021 are the audit results we're presenting today. And I'm actually going to turn it over to Liz Krause, who is the manager on the engagement. She'll go through the numbers and our deliverables for the day, and then I'll take it back and go through our reports and see if you have any questions. Liz.
So today we have your auditor's report on financial statements, and within this report, we disclose management's responsibility for preparation and the fair presentation of the financial statements in accordance with U.S. generally accepted accounting principles, and that includes the design, implementation, and maintenance of internal control. Our responsibility as auditors is to express an opinion on these financial statements based on our audit, which we conducted in accordance with U.S. generally accounting principles and standards applicable to audits conducted in government auditing standards. And that requires that we plan and perform the audit to obtain reasonable assurance about whether your financials are free from material misstatement. So our audit really consists of performing procedures to assess the reasonableness of the disclosures in your statements. We use judgment when assessing the risk of material misstatement, and we consider the internal controls present within the authority's preparation of the financial information in order to design our audit procedures, but not for the purpose of expressing an opinion on the effectiveness of those controls. So we do evaluate the appropriateness of accounting policies and assess the reasonableness of accounting estimates used by management. So based on our results of our audit procedures, we did determine that the financial statements are free from material misstatement, and therefore we have a clean or unmodified opinion. Government auditing standards requires that we report on internal controls over financial reporting and on compliance and other matters. And here we perform certain tests, and the results of those tests are not to provide an opinion on the effectiveness of those controls, but we did find no matters here on this report. The third bullet is your auditor's report on compliance with section 2925(3)(f) of New York State Public Authorities Law. Here we perform some additional procedures on the authority's investment guidelines, and we found that they were in line with the Public Authorities Law, and we had no matters here. Sarah will be going through the communication with those charged with governance and the management later after I'm finished with your financial statement numbers. So on your statement of net position, your assets for the year ended June 30th, 2021, you had cash and cash equivalents and investments of $2,718,000. This is down around $2.9 million from 2020. Mainly, you had a consistent investment year, but there were some withdrawals made during the year in order to pay down debt for the year. But next, you have your notes receivable, which is really your mirror bonds, your series 2005A and 2007A. This mirrors relatively, not line for line, but it mirrors your bond payments that you make down in bonds payable. So you have your mirror bonds. You had total receipts coming in of $2,022,000. That also includes some amortization of the premium of $115,000. And like I said, with the investments, your bond payments down in liabilities, those payments totaled around $4,690,000. So therefore, you kind of see that there's like a little lag in payments coming in versus payments going out on the bonds. So investments were used to cover the difference. You have due from other governments in total assets. This is really your May and June of 2021 sales tax receipts coming in, plus a little bit of interest. So you had some increases on sales tax this year during the year, and in May and June specifically. That's why you see an increase in your due from other governments here. In liabilities, what you had coming in from sales tax receipts, you then paid out to the city of Buffalo. So it's May and June sales tax receipts. This number is slightly lower due to amounts that you have set aside for debt service and admin expenses. We went through the bonds payable. Again, you had total payments of $4,690,000. And then there was some amortization of premiums here of roughly around $209,000. And then other liabilities, this really consists of your ERS, your pension accrual, and your OPEB accrual. In the current year, you had around $1,700 in ERS accruals. In the prior year, your pension accrual was $466,000. So therefore, you kind of see that slight decrease there. OPEB was $1,282,000 this year, slightly lower in 2020 at $1,074,000. You see your deferred inflows and outflows, deferred outflows of $349,000 and your deferred inflows of $529,000. These are really just contra assets, contra liabilities of OPEB and ERS. Really, the fluctuations you see are due to changes in assumptions, changes in measurement, and other inputs that cause those numbers to fluctuate year to year. By difference, you have net position of deficit $293,000. Your restricted net position is $2,423,000. This really consists of your cash and investments held in debt service, plus any interest payable out. And by difference, you have a deficit unrestricted fund or net position of $2,716,000. On your statement of activities for the year, June 30th, 2021, you had sales tax revenue of $1,052,000. This is up over 16 million from 2020. And this is really just based on sales tax increases within the state for the year. We do tie out these numbers that come in for sales tax receipts to make sure that those numbers are in line with what the state is actually remitting. Next, you have state aid. We look at your budget. Typically, your budget year to year is around 161 million. But in the prior year, because of information received from the state, we did reduce your June payment by roughly 20%. That was around 19 million of a reduction in the prior year. You then recouped that in 2021, as well as what you would normally receive given your state budget. So it looks almost like you've increased double that 19 million, 19 from 2020, and then you got your normal 161 million based on the state aid budget. So there's your increase that brings you to 181 million in state aid or AIM payments. And next you have your interest and other income of 261,000. This is down roughly 267,000 from 2020. Mainly declines here are as your outstanding mirror bonds decline and it gets paid off, the amount owed is less and less from your mirror bonds. Expenses for the year, you had pretty much whatever came in sales tax and state aid was then remitted or distributed to the city of Buffalo and to the city of Buffalo School District. The city of Buffalo itself gets your sales tax and AIM payments. City of Buffalo only gets sales tax remittances. And again, due to the increase in sales tax received and the 2020 recoupment of the 20% reduction, you then remitted a significant amount more than you did in the previous year. General and administrative expenses total 860,000. This is an increase from the prior year of 502,000. In 2020, due to the adjustments we had to make for your OPEB activity, you actually recognized OPEB income of approximately 439,000, and you recognized $200,000 of expense this year. That's therefore you see that swing going up, but really, if you exclude that information, you really did see a reduction in general and administrative expense. Mainly in your payments to outside vendors and contractors. And then interest expense of 92,000. Again, as you pay down your bonds, you will see a reduction in interest expense recognized. Overall change in net position is a deficit $65,000, pretty consistent from the prior year.
So I'll jump into the reports now and talk a tiny bit more about the numbers as part of that. So the communication with those charged with governance is another letter that's part of that packet. That is required that we disclose this information to you as part of the audit. One of the significant takeaways from that report is that your financial statement numbers are not all numbers that are an exact science. So whereas we can tie out your cash to your bank statement and your reconciling items, we certainly can't tie out to an exact number for your other post-employment benefits or OPEB liability, for example, or also for the pensions. In addition, those amounts that discussed relative to the sales tax payments, so the amounts due from other governments and the liability as of year end, those are estimates of May and June sales tax receipts. And then the amount of accrued interest income and expense, and then the amortization of the premiums on bonds, those are estimates as well. So it's just to make you aware of what the estimates consist of in your financial statements. Similarly, we disclose what we consider to be the more significant footnote disclosures, and you'll see that those basically mirror where the estimates are. So note 4, due from other governments. Part of the reason that was more significant was because of last year, as well as Liz mentioned, that 20% state withholding. At the time, you didn't know if you were going to receive that 20% or not, which is why you reduced your receivable by that amount last year and then recognized it and all of this year's revenue in 2021. And then note 5, 6, and 7 are all related to your long-term liabilities. Note 5 really focuses on the bonds. It shows each bond individually, as well as the payments for principal and interest due over the next 5 years and then in 5-year increments. Note 6 is the pension with the employees' retirement system. Again, your employees are members of that, and you have required contribution rates that the state sets for those pensions. And then the state estimates what the authority's share of that total pension liability is, and that's what's recorded on your books. The plan was actually almost fully funded as of the end of the state's fiscal year, 3/31/21, which is when it was measured. So that was not a significant liability actually as of 6/30 for you. And then note 7, and as I mentioned, is the other post-employment benefits, which is calculated under the modified basis. And as Liz mentioned, there were some changes in the calculation last year, which resulted in that income versus expense that kind of right-sized your liability a bit. If there are any difficulties or disagreements with management, we would include those within the letter, and there were not. If there were any corrected and uncorrected misstatements, those would be here as well. Management representations is kind of the last piece of the audit. Management signs off that they've disclosed everything and provided all information to us, and we actually got that today, so that is no longer open. And then if there were any other consultations with other accountants or other audit findings or issues, we would include those here as well, and there weren't any. And the final letter that we include is we call it the management letter. In your case, it's really a no material weaknesses letter. It's clean. We found no material weaknesses in the authority's internal controls. So the only points we have included in here are 2 new accounting pronouncements, which as of right now will not have an impact on the authority, but we're bringing them up just in case in the future they do, and they might. GASB 87 on leases was actually initially supposed to be effective this year, but it was delayed because of COVID, so it's effective for 6/30/2022. Basically, it makes all leases capital leases, so they would now show up on that government-wide statement of net position. So if you, for example, if you were in a building lease that was not a month-to-month lease, but a term lease, then you would instead recognize a right to use lease asset and a lease liability going forward on the statement of net position at the net present value of your future payments. So if you do enter into a lease in the future, then that would potentially be applicable if it's material. And then similarly, GASB 96 is in essence the same thing, but for subscription-based IT arrangements. So for example, your accounting software or other softwares you use, if you're paying on a subscription basis, you know, either annually or monthly, and that's material enough, then similarly, that would be on the statement of net position. And I don't think there's anything at this point that you're paying on that's material that seems it would need to be recorded, but of course we'll work with management to ensure that's implemented if it needs to be for 2023. I think that is everything relatively quickly. Does anyone have any questions?
Just for those that are watching, I think that it might be important to explain why the net position is negative and what that actually means. I don't know if Matt or Sarah, if either of you can just put that on the record. Thank you.
Sure. So your net position is going to fluctuate a bit primarily because of those other post-employment benefits and recognizing those actuarial based expenses. So because that number is an estimate, your other post-employment benefits relate to the potential benefit of employees of the authority who retire from the authority with certain benefits relative to health insurance. So it's the estimate of that cost. It includes various assumptions, including turnover, how likely employees are to remain with the authority until that time they retire and then get a benefit, mortality assumptions, health insurance rate assumptions. So there's no way for authority management to know exactly what that number would be each year and create a budget that would include that. So really, from the authority's perspective, you're really estimating and retaining at the authority versus remitting to the school district and the city the amounts you need more so on a cash basis for those expenditures. So at any given time, there could be a bit of a deficit because of the difference between what you're actually paying in benefits and those actuarial based assumptions.
And on our total budget, this is an insignificant amount of money, correct?
It's actually, there's not even any, there's no cash in this piece of it.
And that's what I meant. I just wanted to
Yeah,
make sure. that
correct,
no one-
correct. It's a non-cash item.
I wanted to make sure that no one looking at this thought that we were actually running a real deficit. That was the only point.
Okay.
Jeanette, any other questions?
Director Jurasek, I had muted you during the call. I heard some feedback and was trying to identify it, so you'll need to unmute yourself.
Okay. Vice Chair Jurasek, are you there? Jeanette, can we see whether or not we can get him to call back in?
She's still there. She's probably just having some
Oh, now
problems.
she's muted, so now I guess she can unmute. Jeanette, can you unmute, please? Can you unmute her?
I cannot. Oh, where did she go? Is she calling back in?
Maybe. Jeanette, are you there now?
I think she hung up and she's going to be calling back in. I don't see her.
Hello, this is Jeanette Jurasek.
Hi, Jeanette. Can you-
Sorry, I was getting conflicting instructions about being muted or unmuted. No, I have no further I have no questions on the
Okay.
presentation.
Then I'll accept a motion to forward the audit and its findings to the full board with a recommendation of approval. So moved?
So moved.
Okay. Second, all those in favor say aye.
Aye.
Okay. We will do that then. The next item includes a review of the annual report and the recommendation for the full board to approve this item in substantially its final form, as well as to delegate authority to the chair, the interim vice chair, the executive director, and the comptroller to make any necessary changes that may be required for its accurate completion. The draft annual report has been provided to you for your review and is located under tab 2. In addition, under tab 2 is the annual investment report. Jeanette, could you please discuss this with us?
Yes. Yes, thank you. The annual report is a comprehensive document that provides an overall encompassing summary of the actions taken by the BFSA over the last year. It includes various performance measurements and accomplishments during the most recent fiscal year, which is ended June 30th, 2021. It is required to be filed pursuant to Section 2800 of Public Officers Law with the state within 90 days after fiscal year end, along with the audited financial statements. In addition to filing this report with the Office of the State Controller, there are several other required state officials that we do submit and send a report to and file a report with. And we also send it to other interested parties who aren't required, but we do submit a copy of the report to them. We also post it to our website along with all the annual reports from past years. The annual report, it supplements information that's been provided in the prior years, and it should be read in conjunction with that information as well to get a true comprehensive picture. In terms of what's in the report, there's a general discussion, including the purpose of the BFSA, the mission of the BFSA, the administrative functions, who serves on the board, who serves as staff. The general discussion was enhanced to discuss COVID-19 and the impact of that, of course. Additionally, sadly, this year, there's an in memoriam section to honor the vast contributions made by Secretary Arthur. The second main section of the report is the summary of accomplishments, and it provides performance measurements over the last year. There's a broad discussion on economic and financial statistics that reflect the progress of the city and the covered organizations since the BFSA was created. It also discusses challenges that all of the organizations are facing. There's a discussion of the multi-year financial planning process as being the core of the BFSA's administrative function. And it is included along with a review of the work conducted by BFSA over the last year. A description of each report issued by BFSA over the last year is provided, along with recommendations and comments made by the authority and the covered organization if applicable. There were a total of 32 reports provided and issued over the last year. Other fiscal monitoring is discussed, including the monitoring of workforce trends, a summary of financing framework of both BFSA and the City of Buffalo, among other various matters. Finally, on page 45 of this report is a cumulative financial impact summary of the actions taken either by BFSA since inception or the City of Buffalo with the oversight of BFSA. The total cumulative impact of this is $459.8 million, so roughly $460 million. A significant amount of $240 million represents savings to the city and the district, primarily for the 3-year wage freeze, which allowed for essentially a reset to these organizations. The continued investment of sales tax intercepted for debt service sold on behalf of the city, and we have guaranteed investment contracts that we put those dollars into, provided an additional $200,000 of earnings that were remitted to the City of Buffalo above and beyond what they could have earned. Also, there's $1 million of distressed hospital intercept sales tax dollars that were not intercepted at the state level due to the legal language of the BFSA Act not permitting the State Controller's Office to do that intercept. So that is provided on here as well. And then the final third section provides the final BFSA reports, the reports that were already approved by this board in May and June, but we combine them so that there's one document that includes both the preliminary financial plan and the final financial plan. Are there any questions on the annual report?
I have none other than to say thank you. It's a huge amount of work and it was well put together again this year. So I really appreciate the staff and yourself, Jeanette, for all of this work and making it so clear.
Thank you very much.
If there are no other questions, I'll accept a motion to accept the annual report as presented to us in substantially its final form, and to delegate authority to the BFSA chair, interim vice chair, and executive director, and the controller to make any necessary changes that may be required for its accurate completion. Is there a motion?
So moved.
Okay, second. Any discussion? Seeing none, all those in favor of the motion say aye.
Aye.
Aye. Opposed, it passes. A copy of the annual investment report has been provided under tab 2 in your book. Claire Waldron will discuss the items with us now. Claire?
Good afternoon. New York State Public Authorities law requires that the authority annually prepare and approve an investment report, which shall include investment guidelines. The investment activities of the authorities our major focus is safeguarding the principal amounts, as well as realizing a reasonable return on investments. No modifications were made to the investment guidelines this past year. We had total cash and investments at June 30th, 2021 of $2,718,269. The BFSA recorded total investment earnings of $140,966 during fiscal year 2021. During the year, BFSA had two principal types of investment accounts. We have funds held by the Bank of New York Mellon, and that's largely to service our debt service set-asides. And we also have BFSA operating accounts that are maintained at KeyBank. GASB 72 requires that at year end, we make an adjustment of our investments to fair market value. We did so this past year, and an adjustment of $48,782 was posted. We incurred no fees on investments or commissions in connection with our investment portfolio during the fiscal year. We did have expenses related to our trustee of $6,019. Also, as part of the investment report, the independent audit is included, and that has previously been reviewed. Thank you.
Thank you, Claire. Are there any questions, discussion? Seeing none, I'll accept a motion to approve the report.
I'll move to approve.
Thank you. All those in favor say aye.
Aye.
Opposed? Thank you. The report is approved, and we will move on to the final item. The final item of business is to approve the PFM financial advisors as BFSA's financial advisors for a one-year period from October 1st, 2021 through September 30th, 2022. PFM FA has served as the financial advisors to BFSA since the period that the BFSA issued debt on behalf of the city, and retains the historical knowledge related to these complex transactions. PFM has agreed to extend this contract with the same terms, conditions, and rates as last year. A copy of the letter confirming the terms and the accompanying draft resolution has been provided under tab 2 in your book. Is there a motion to approve the one-year contract of PFM as the BFSA's financial advisors?
As moved.
Okay, second. All those in favor say aye.
Aye.
Opposed? It passes. And is there any other new business to be addressed? Hearing none, this concludes the meeting of the Audit, Budget, and Finance Committee of the BFSA. Is there a motion to adjourn?
As moved.
Okay, second. All those in favor say aye.
Aye.
We are adjourned. Thank you, everyone.